Congratulations. Nice to see you. Good to see you. Good to see you. Congratulations, and thank you to our panelists. We're going to have a short break, so make sure you're back here at 3:20, 15-20 hours. More content, more leaders sharing these ideas. And remember, hashtag HKFTW, download your app, and make connections there. See you in a little bit. We're back. That was a very short break, but hopefully you had some time to make some connections. That's wonderful to see. Well, moderating next, we have Daniel Eidan, advisor at BIS Innovation Hub Center, Hong Kong, in Bank of International Settlements. He will be talking to leaders of Bank of International Settlements, Bank of Russia, Hong Kong Monetary Authority, and People's Bank of China. They will be discussing retail CBDC, the lessons of fast movers, and the road ahead. So please welcome them live and online on our global stage.
Okay. Hello, everybody. Hello. It's wonderful to be here. I hope everybody had a nice break and is enjoying Hong Kong FinTech Week. I know I'm super excited to be here in person for a live event, finally, after a long time. So we're here today to talk about retail CBDC. As maybe many of you know, 90% of the central banks are engaged with some form of CBDC. And the more we talk about retail CBDC and the more we work on retail CBDC, the more we're kind of challenging the fundamental definitions of what money and digital money really is. With me today, I have some of the leading thinkers, but more importantly, some of the leading doers in this space. So we're going to talk a little bit about some of the social, legal, regulatory, and technical challenges and opportunities that this space provides. In this talk, we're going to give a little update on the projects that are being run. We're going to discuss some of the challenges. We're going to bring in some of the wider context around FinTech and innovation. And of course, we're going to point towards the future. So with me, maybe going from left to right, I'm honored to have with me Mr. Alexey Zabotkin, the Deputy Governor of the Bank of Russia. Mr. Mu Changchun, the Director General of the Digital Currency Institute of the People's Bank of China. Ms. Bénédicte Nolens, the head of the BIS Innovation Hub Center, Hong Kong Center from the Bank of International Settlements. And of course, Mr. Nelson Chow, Chief FinTech Officer from the Hong Kong Monetary Authority. Thanks for being with me today.
Thanks.
Thank you. Thanks, Daniel.
Here's.
So Changchun, maybe we'll start with you. You know, China's clearly been one of the most advanced countries with the development of CBDC, having worked on CBDC since 2014 with the Digital Currency Institute. The Digital Currency Institute is currently running some domestic pilots with the e-CNY. I'd be interested maybe you could give us a little update on the e-CNY, and maybe if you could zoom in and speak specifically about when we'll see the e-CNY move from a pilot into a production system.
Thank you, Daniel. Good day, everyone. It's my pleasure to be invited to the Hong Kong FinTech Week, and I'm very happy to join today's panel on retail CBDC. We actually set up a task force to study digital fiat currency early 2014, and we established a Digital Currency Institute in 2016. And in a very same year, we decided to adopt a two-tier operation model, which has been well recognized by the central bank community. And then starting from the end of 2019, PBC has launched the e-CNY pilots or trials in Shenzhen, Suzhou, Xiong'an, Chengdu, and scenarios and use cases in 2022 Beijing Winter Olympics. Shanghai, Hainan, Changsha, Xi'an, Qingdao, and Dalian joined the pilot since November 2020. As of October 2022, 2021, 140 million individuals has opened their wallets, and 10 million corporate wallets have been created, with transaction volume to totaling 150 million, transaction value approximating RMB 62 billion, and 1.55 million merchants can now accept e-CNY wallets, covering utility payments, catering services, transportation, shopping, and government services. For the official launch, we don't have an agenda yet, but before we could officially launch the e-CNY, we have to address three challenges. Firstly, acquiring capacity building. While the current pilot program have been running quite smoothly, acquiring environment building is still on the way. On one hand, we seek to improve user experience with diversified choices of smart and tailored design wallets and a wide variety of use cases. On the other hand, we are building an acquiring system for all the merchants. Secondly, sound security and risk management mechanism. CBDC are easily targets of hackers. Therefore, security is the first priority of system development. Now we collaborate with the national team to do security training and trials. The PBC will continue to improve the security management for the e-CNY operation system throughout the entire life cycle of the e-CNY, covering encryption algorithm, financial information security, data security, and business continuity, so as to ensure safety and stability of the system. Last but not least, well-defined regulatory framework. We don't have big obstacles in terms of law. As you may know, that the newly released revised draft of the law of People's Bank of China stipulates that RMB includes both physical and digital forms. But however, regulatory measures and requirements for e-CNY need to be tailor-made. Thank you. Back to you, Daniel.
Thank you, Changchun. That was very insightful. Nelson, maybe over to you. When I think about Hong Kong, I think about kind of a highly digitized payments infrastructure. The HKMA just released their FinTech 2025 strategy overall, and within that strategy, there was also a paper talking about a digital Hong Kong dollar called the e-HKD. I'd love to maybe if you could share a little bit about the e-HKD, some of the motivations, and maybe some future things that everybody can look out for.
Thank you, Daniel. I think a lot of people ask us these questions when we more openly talk about e-HKD when we announced the FinTech 2025 earlier this year. I think all along, you know our stance is to focus on the wholesale space. That's why we work on Project Lion Rock since 2017, and then work with Bank of Thailand on the Internet Lion Rock phase 1, and then after that, the phase 2. All those studies, we openly talk only about wholesale. But it doesn't mean that we didn't study it, the retail level behind the scene. Right. But as you know, as a central bank, when you talk about something, there is implication. People will speculate whether, when you say e-HKD, are you going to issue e-HKD anytime soon? So that's why it's a very cautious decision. The motivations that you mentioned, I think we need to talk a little bit behind some history. Before we launched this FinTech 2025, we have gone through a 5-year cycle, like a 5-year plan. Since 2016 to 2020, we have gone through a lot of work. For example, we have granted the store value facility licenses. Those are the, for some of the audience that you may not know, it's like the e-money license, the e-wallets. So there are a couple of them. They're competing in the market. Those are the phase 1. And then we have the faster payment systems that integrates all of them, the e-wallets as well as the retail, the banks. So those are the electronic payment systems that you have mentioned. So we have absolutely low sort of issues for citizens within Hong Kong to use electronic payment. So that's why our priority was placed to the wholesale level first. Mm-hmm. But now that we have gone through multiple cycles of our studies, and we have published so many different reports on the wholesale space, and some of the market study have ranked our research the most matured. So earlier this year, we think that it is the right time that we move also into the retail space. Not to say that we are going to announce the introduction of e-HKD anytime soon, but we have to get ourselves prepared. As Mr. Mu just mentioned, at a retail level, it is a different landscape. Mm-hmm. The attack surface is different. Although it's low value transfers, but it's high frequency. So compared to the wholesale, you are talking about a much bigger capacity before you can launch such a system. So I think I give you a little bit of the background. The motivation is enable us to future-proof ourselves. When there is lead that we need to introduce such a retail level CBDC, we will be capable of doing it in relatively short time.
Mm-hmm. Thank you so much, Nelson. It's great to really understand that there's no contradiction between having, a top-tier payment space at a domestic level and still engaging with retail CBDC. Alexey, maybe over to you. The Bank of Russia recently announced a launch of a pilot digital ruble program. The same question goes for you. I'd love to know a little bit more about the project. What are some of the motivating factors for the bank, and maybe a little update on what we can expect to see in the future?
Yes, thank you. It's a great pleasure of being here and sharing our thoughts on the developments of the central bank digital currencies. Indeed, in late last year, we published the first consultation report on the digital ruble, and it was followed with the white paper with the proposed design of the digital ruble in April. The main motivation for the introduction of the digital currency in our case is our belief that the central bank digital currency provides a cheap, even if very basic, payments functionality for the broad categories of users, including both consumers and enterprises, and that actually creates a more competitive landscape vis-a-vis the digital payments currently facilitated by the banking community. And the net result of that, as from any competition, shall be probably lower payments fees and transaction fees charged by the banks on their services which are provided for the electronic bank money, and possibly somewhat more generous interest which will be paid by the banks on the transaction balances to retain those balances inside the banking system rather than to surrender them to the CBDC. That's as far as the motivation goes. Now I will talk briefly about our approach to the architecture of the proposed solution. the digital ruble is conceived as a retail CBDC from the start. That is motivated again by the logic I just described. With, only retail CBDC may give these advantages to the consumers and enterprises. The digital ruble will be the direct claim of the holder on the central bank, i.e. it will be part of the liabilities of the balance sheet of the central bank. All individual electronic wallets for the digital ruble will be opened on the centralized ledger maintained by the Bank of Russia, and the banks and other financial intermediaries will carry out all direct client interactions, including KYC procedures, which is utmost important part of this endeavor, and provide access to the customer digital wallets through their applications. We see this as the most promising approach to negotiate the trade-off, which was identified, if I remember correctly, in the recent BIS paper by Orr and Bohm. It was titled CBDC, the quest for minimally invasive technology. And the trade-off in question is between a complex technical infrastructure as one approach and a complex supervisory regime as the other extreme. And we believe that the complexity of the technical infrastructure in our case will be easier to negotiate than the comprehensive supervision of hybrid or intermediated architectures for the CBDC. I will also speak briefly about the dichotomy between account-based and token-based designs, because that is actually the principal distinction here. It goes without saying that the AML and CFT demands mean that a cash-like anonymity is not an option for the CBDC design. And another flip side of anonymity is much greater exposure to fraud of all sorts, and we observe it with the electronic payments. The banks are increasingly subject to the all sorts of the fraudulent actions by the criminals, which are trying to extract money from the customer pockets, right, or from the accounts, right. The digital ruble wallets will be linked to identities of their owners, and thus, from the standpoint of access, this clearly fits the definition of an accounts-based system. But the currency in these wallets will be tokenized. That is, it will consist of individually distinguishable tokens. By analogy, you can think of this approach as of being similar to a usual wallet, which holds individual banknotes, which are tokens, right? But the wallet itself is also monogrammed, and each banknote then retains a mark identifying the chain of the wallets through which it passed during its life cycle. And possibly it will be marked with other properties, so this shall facilitate the novel features related to traceability of money flow or conditioning of their use, and the exact scope of this functionality is yet to be explored, but conceptually it is part of the digital ruble's design. And last but not the least, the very important point from the standpoint of the monetary policy itself is the matter of remuneration of the digital ruble balances. For most central banks, it is specified in their white papers as the question yet to be decided in whether the central bank will be paying or charging, in case of the negative interest rates, the interest on the balances in the CBDC wallets. But we very strongly agree with the thesis which was stated in that paper, which I already cited, that the economic design should emphasize the use of the CBDC as the medium of exchange, but it needs to limit its appeal as a savings vehicle. And in the light of this, the Bank of Russia made a very definitive decision already that the digital ruble will not be interest-bearing instrument, and this will be the ultimate way to draw the line between the medium of exchange function and the means of saving function, and thus to facilitate the unbundling of these functions for the digital money. So our piloting will commence at the start of next year. Based on its results, we will formulate the roadmap for the digital ruble deployment to the economy. At this point, there is no predefined timeline, since the final decision on the introduction of the CBDC will be contingent on the results of the pilot, and of course on very careful watching all the experience of those colleagues which go first, namely the People's Bank of China. Thank you very much. I will stop here.
Thank you, Alexey. That was fascinating. I hope that we'll have enough time to come back to a lot of the key points that you made. You touched on KYC, AML, accounts versus tokens, the remuneration, the unbundling of the services. I think that all of those could be almost a panel in their own right. So Bénédicte, maybe now over to you. We spent some time talking about regional, jurisdictional specific projects. One of the mandates of the BIS Innovation Hub is to identify critical trends in technology. I'm wondering if maybe we can zoom out a little bit and talk about the trends more broadly across all jurisdictions that you feel kind of sit alongside some of the advancements on retail CBDC.
So thanks, Danielle, for that question. I'm not sure I can answer that, like, let's say, for the whole world, but I think people have been touching upon some of the points. I think the first evolution that we've really seen in payment in the last 10 years is the intervention of the big techs. So in many ways, actually, I think it's kind of odd, but my own journey is reflective of the evolution that's been going on. So I started actually my interest in everything digital and finance with a focus on Alipay. So when Alipay came around and I saw them accumulate licenses across different aspects of finance, whether it was asset management, banking, payments, there was something really special going on there. So I covered that actually in my stay at the SFC in a report drafted for IOSCO. And it was very clear that something extremely fundamental was going on the use of technology way beyond the banking system. So I think if you look at that way, the banking system has been subject to, you could say, evolution, pressure, or competitive threat for a consistent over 10 years now. That's my own view, quite actively. Now, towards 2013, I got interested in Bitcoin. So then I saw Bitcoin and I go like, what's that trying to do? What's that trying to do other than what the big techs are trying to do? And then it became clear that with the use of cryptography, you could do a transfer globally in seconds, right? And you could do it at very low cost. And so I went like, whoa, this is the next stage of evolution. So we've gone from a big tech wallet on very large scale to more than 1 billion people in China with savings function, asset management function and everything. And now we're going into this cross-border context of, with the click of a button and a public and a private key, being able to transfer globally. So again, I went on to the research mode and I included that in my research. And then about a year later, I joined actually a company, which is Circle, that exactly had as a mission to use at the time there was only one blockchain, and that was Bitcoin, so to use the Bitcoin rail for global transfer and global payment. But then came the next problem, and the next problem was that Bitcoin is extremely unstable. We know that, right? It's gone up and down as a yo-yo over those 5-6 years. And even if it stabilizes upwards, it becomes a problem because people want to hold it rather than use it. So then the stablecoin concept came around, right? And so in stablecoin land, there was the unregulated stablecoin, you'll all know, which is Tether. So then the company I worked for introduced this regulated stablecoin. And I think where we're now as a central bank, so in some, the industry, the world is coming full circle, and with it, I'm coming full circle. So in my role at the BIS, we are working now on, indeed, central bank digital currency, and we're working on that from two perspectives, the wholesale perspective and the retail perspective. Both of them actually are similar but different. The similarity is that we're exploring the use of techniques for speeding up the payment and reducing the cost, right? But for wholesale CBDC, the focus has to be on extreme stability because you're making very large payments. You're making payments that you would not want to do in an unstable or unsafe way. Whereas for retail CBDC, you're probably focused on usability, speed, and for, in the case of central banks, probably zero cost. And so I think we heard a lot of interesting things here already from the three prior speakers, and I think I started spotting some areas of consistency in how these three different people are thinking about CBDC, retail CBDC, including the need for still a tiered system to fulfill the AML obligations, and the need for it to ultimately be a public good. So what is the difference between ultimately a digital fiat currency and a digital currency? Is that a fiat currency is a liability on the central bank. It is backed by the trust of a country, whereas that's not the case for a digital currency. So I'll leave it at that, but in sum, I always feel that somehow I've come full circle, and we're all going full circle. And I think as we are going full circle, we are learning from each other, and I really think we need to both do that and secondly acknowledge that we're doing that. Yeah.
Thank you, Bénédicte. I can always trust on you to bring the big picture, holistic overview. So that was very well received.
I didn't quote BIS research, though, in case you expected that.
I'm disappointed. Everybody else did, so it's okay. Changchun, maybe over to you. I mean, so we're mentioning the term retail CBDC, and the term wholesale CBDC was also mentioned a lot. And of course, the distinction between retail and wholesale is that retail is generally available, whereas wholesale is limited for institutions and tier one banks, primarily for interbank payments. So one of the things that comes up a lot when we talk about retail CBDC is the notion of KYC and AML, and Alexey brought that up as well as part of the architecture with the digital ruble. In the recent e-CNY white paper that people like me, of course, study very closely, there was a great description of the different wallet structures that are provided with the e-CNY, in specific within the context of kind of KYC and AML. So I was wondering if maybe you could describe that hierarchy a little bit and how the wallet structures provided with the e-CNY aim to kind of combat some of the AML and KYC issues around retail general purpose digital currency.
Thank you, Daniel. Our design or architecture maybe is different from digital ruble, like Alexey have said. The managed anonymity is one of the key features of our e-CNY. On one hand, it echoes its position as M0 is subject to safeguard the reasonable appeal from anonymous transactions and privacy protection of the general public. On the other hand, it is obliged to address the need to combat illicit transactions such as money laundering, terrorist financing, and tax evasion, etc. Leveraging on the loosely coupled account linkage design, the e-CNY wallet adopts tiered arrangements, which manage to strike a balance between the privacy protection and the KYC and CFT requirements. Based on the strength of KYC or CDD, authorized operators can open 4 types of digital wallets for their customers and set transaction and balance caps accordingly. Currently, the least privileged wallets, which is the 4th category of the wallet, can be opened with only phone number and thus are fully anonymous even to the PBC and the authorized operators, because according to the personal information protection law, the telecom operators are forbidden to provide any ID information to other third parties, for example, the People's Bank of China or other authorized operators of the e-CNY. With per transaction limit set at RMB 2,000, daily transaction limit at RMB 5,000, and the annual transaction limit at RMB 50,000, and the balance cap at RMB 10,000. So that's the caps on the least privileged, or the 4th category of the wallet. And the most privileged wallet, which is the first category of the wallet, or the category 1 wallet, which have to be opened on the commercial bank counter, adopt same KYC requirements as those for opening bank check accounts with ID information and no transaction or balance cap is imposed. Also, the function of sub-wallet pushed to the online merchants will ensure the safety of customers' personal information by encryption or tokenization. Having said that, the e-CNY system collects less transaction information than traditional electronic payment system and does not provide information to any third parties or other government agencies unless stipulated otherwise in law and regulations. We, the PBC, as always, underline the importance of combating criminals and tele-fraud activities in e-CNY design. Risk control is prominent global consensus. For the purpose of to preserve financial stability, central banks and standard setting bodies, including the BIS and our innovation hub, shall explore anonymity in the prerequisites of risk prevention. Those approaches that fail to meet the requirements for AML, safety, and tax evasion shall be out of our considerations. The e-CNY system strongly follows the principles mentioned above. For the large value and suspicious transactions, the authorized operators should comply with the AML safety rules and the reporting responsibilities to those FIUs. Thank you. Back to you, Daniel.
Thank you, Changchun. That was very interesting. I want to build on something that Changchun mentioned. Maybe Nelson, this one I think is good for you. Changchun mentioned the tiering of the banking system, and actually I think Alexey mentioned that as well. And I think it's an interesting context when you think about Hong Kong and the bank note issuing banks as well that is unique to Hong Kong. In the recent e-HKD white paper, there was a big section of the white paper that was discussing interoperability between the interbank payment system and the retail system. Also the notion of deposits and maybe the influence on bank deposits for retail CBDC. So maybe we can zoom in on some of those issues around deposits and the role of the commercial banks within a potential e-HKD architecture.
Sure. You talk about note issuing mechanism. I think this is Hong Kong, we all Hong Kong people knows it very well. If you just open your wallet and you find a two notes, right? The 100 notes or the $10 notes. So you can tell, I think we're pretty unique in the world that you see a bank's name on a note. It's actually issued by a bank. So the liability, the direct liability of the monies that you're holding is actually belongs to a commercial bank. And only the $10 notes and the coins are actually issued by the government. It's not direct liability of us. So when we talk about a two-tier architecture, I think Hong Kong, we know it so well because we have been running this system for decades.
Nelson, you're going to make me hoard those $10 bills.
Yeah, and you actually, I always joke around, you talk about stablecoin. You work for a company that do stablecoin. Actually, all Hong Kong coins that in your wallets are stablecoins. Those are the most reliable stablecoins, but only that is not digital. But well, back to your point about the e-HKD white papers that we have published earlier, just I think a couple of weeks ago. You can all download that paper. We spent quite a lot of time. We sort of publish a flexible architecture. Is two-tier. And when banks ask the questions, what is our role, we can tell them clearly, your role will remain almost the same like now. So if you are no issuing bank, because in the two models that we have published, those we have to rely on the commercial bank to be the distributor of the e-HKD if being issued. So, so their role will remain the same. They will be the customer-facing party. Many of our speakers have already mentioned about the privacy preservation and also the importance of traceability. So that white paper have laid out a potential technical architecture that you can strike that balance. So I urge you to download that report. You just Google it, e-HKD. I think it will be in one of the top link that you can download the report. And the other thing is it's a lengthy report. A lot of my friends, when they received it, they said it's very hard for us to go through chapter 5. Chapter 5 is the hardest one. So I think, but we would like to seek comments from the academia, from the central banking community, to give us feedback of the potential architectures that we have laid out. And another question, very quickly, I know time is limited. You mentioned about the potential deposit run, that kind of thing. It's easily solvable because you can cap the wallet amount. So each citizen can have only one wallet, and the wallets can only have a limited amount of money. Then that you will save that problem very easily. Yeah, but of course, different central banks will have different priorities and different designs. That's the ones that we sort of proposed.
Great, thank you. So it's interesting, the capped wallet structure connects between the KYC AML that Changchun was speaking about and also the deposit issue. Alexey, maybe over to you quickly. Stablecoins have been mentioned kind of throughout, and if I'm not mistaken, probably the biggest announcement around stablecoins was the initiative by Facebook with the DM or Libra proposal not so long ago. And if I'm not mistaken, I think Facebook has 66 million users in Russia. So I'm just interested in what's the Bank of Russia's response to that, what's the attitude towards that, and maybe what's the relationship between regulation of stablecoins and retail CBDCs, whether you see them as competitive or cooperative, or any insights kind of connecting those two topics.
Yes, indeed, the topic of stablecoins is arguably more controversial than the merits of CBDCs. So the difference of opinions is much larger, and I guess you, Daniel, truly will not permit us time to cover all the dimensions of this debate today.
You have about 2 minutes.
So the issue I would want to elaborate on is to what extent the stable coins can be regarded as stable or safe assets, right? And the risks they may pose for the financial stability at large. Here, the Bank of Russia wholeheartedly subscribes to the quite orthodox treatment of stablecoins, which has been was articulated by the BIS this year and already touched upon by Bénédicte. By my personal take on stablecoins is a touch more orthodox than that, and since it's a very important issue, I will make it to sound even somewhat provocative, if you don't mind. In a nutshell, in my opinion, the stablecoin label by itself is somewhat of a marketing misnomer. Surely the economic value promised by the stablecoins is more stable than that of the private cryptocurrencies like Bitcoin. But it falls far short of the stability offered by the bank fiat money, and that's something which Bénédicte already explained us, and of that which will be offered by the CBDCs as another incarnation of the fiat money. That is probably the value of the stable coins will inevitably fluctuate with the value of the basket of reserves which back each of them. That is, unless those reserves are 100% in readily available cash instruments. But to the best of my knowledge, this is not what most stablecoins inventors currently plan. If there is a liquidity or composition mismatch between the liabilities of the issuer, that is the issued stablecoins, and the assets which back the stablecoin, that is the pool of the reserves, so that if there is this mismatch, that there is no implicit guarantee that the holders of stablecoins will be able to convert them into the underlying one-to-one at any given moment. We all understand that in any market there are spreads to bid-ask spreads to trade any asset. Plus, there are fluctuations in the liquidity in the liquidity conditions. So the liquidation of the underlying pool of assets will result inevitably in somewhat different economic value than what is the current mark-to-market on the stablecoin value indicated by the issuer at a given point in time. So with that respect, we have to make the parallel with the banks. The banks are able to honor similar obligation with respect to the bank money only because they have access to the liquidity window of lender of last resort, that is of the central bank. But as we know from the fairy tales, all magic comes at a price. The price of this magic, of this access, is the special regulation and oversight and capital requirements and all other things which the banks are burdened with by the regulators. So in my view, if the stable coins want to become a sizable part of the payments landscape, which offer this stability on par with the fiat money, they must be regulated in a similar fashion. But in that case, they will be just another form of bank money. To put it more bluntly, the attraction of stable coins issued by non-banks is to a very large extent just an attempt to capitalize on regulatory arbitrage with the heavily regulated bank money. Unless if the stable coins are to become the significant part of the payments technology, they shall either keep all of their reserves in cash, 100%, and then they will be simply a payments provider, or they will have to be regulated as banks, otherwise the financial risks and the risk to the financial stability, which may emanate from these structures, will escalate considerably. And in a way, the early stablecoins was the US banking system without the central bank, which operated in the 19th century. And it actually ended quite in tears, as we remember, in the crisis of 1907, after which the Fed was created to hedge the economy from similar occurrences in the future. I will stop here.
Wonderful. Thank you, Alexey. Bénédicte, I want to give you 2 minutes maybe to close it out, if that's okay. I know that the clock just turned red. So one of the things that we talk about a lot in CBDC is interoperability. We have 3 people here leading 3 different projects, and of course, they all need to coordinate and interoperate at some form. Can you talk a little bit about the role of the BIS with coordinating central bank thinking around this topic, and maybe just general insights into how it's going?
So yeah, look, we're running out of time. So this is a very difficult topic, and the answer, Danielle, is that there isn't an answer yet. So most central banks are actually tinkering with either retail or wholesale CBDC, and there seem to be patterns, and patterns, for example, are tiered system, of course, respect for law and regulation, including AML, costless, interestless. These kind of things are becoming patterns, but there aren't technological standards yet. And as long as they're not there, then interoperation on the long term becomes an issue. However, just a pitch for our panel tomorrow. So tomorrow we will have a panel on the MCBDC bridge. We call that the M-Bridge. And in fact, that is an interoperation platform. So that is a platform where you can interoperate these central bank issued currencies at a wholesale level across countries. So the solutions are starting to emerge, but we're so early in the journey that I only think we're at the start of the journey on interoperability in that regard. So, and yes, look at the BIS-IH, BIS Innovation Hub, we coordinate between the central banks globally. We are the so-called central bank of the central banks. And we have great teams. So Danielle is part of our team, joined us from Canada, and there's the rest of our team if you want to go liaise from different parts in the world. We now have 7 centers coming up soon across the world to actually get to that cooperation and interoperation on the medium term. Thank you.
All right. I think our time is up. Thank you to all our panelists. This was incredibly insightful. Stick around for the next panel and join tomorrow for the MCBDC Bridge panel as well. Thanks a lot.
Thank you.